everyone. Happy Wednesday. I hope everyone can hear me just fine. So we're gonna make this one very quick. I just want to go over the scalping method, just to give everyone a little refresh of what's been going on lately for the past couple days. It's been scalping heaven for absolutely anyone who's been trading for the past couple days. I unfortunately have not been trading since Monday because I've been actively fixing some, other duties I had to worry about. But I'm really excited because April is known for being one of the best trading months. Pretty much throughout the year. April, July, September. Those are typically the months where the market starts to pick up a lot of steam, and they typically pick their directions very quickly. And I wanted to go over basically what's been going on with the rotation that's been happening in the market. So basically, if you don't know what the rotation is, um, the idea is that a lot of the tech stocks that we've been typically trading for the past couple of days, I mean, couple of months, are now rotating into infrastructure, into finance. So basically, everything is rotating. And I wanted to take a look at what basically is going on with the Chinese stocks. And seeing how they have been reacting to the recent changes with economic reports and all of that. Yes, I have to show Neo because one, it's like it's such an easy thing for me to show you guys when you're trying to scalp a trend. And it is a great technical play because I played it 6 times today. And I'll show you guys what exactly I did to identify playing the trend down. I actually didn't start trading until about 9 a.m. So I was having a little bit of a trader's itch because I haven't traded for 3 days. But we're gonna go ahead and break down what I saw with Neo when I entered into puts. So normally when you draw a trend line, right, you could just very much see, you could see an epic squeeze going on with Neo going all the way down, and you can see that it's just going in a straight down direction. So this is the direct trend of Neo. What happened? Well, what happened was basically it fell below this zone. So this zone from the 1 hour chart, it pretty much was holding Neo up as a support pretty much the whole time. So with some other catalyst-based news, and lackluster, news going on in China, a lot of these stocks have been falling. Let me show you guys Baba. I don't know if Baba's reacting the same way. I actually haven't been looking at it. But let me take a look at BA. I don't think I don't think they fell today. I think they were doing just fine. But overall, as you can see, yes, they did experience some sort of a downtrend, very similar to Neo within that first time frame, and we pretty much went into a complete downtrend. But I'm gonna go back into Neo because I want to show you guys how to exactly identify these kind of plays. So if you are pre-charting, which we recommend you do, you should be pre-charting these zones to see what exactly is going to go on. If a zone breaks, then you should very much take plays in the direction that the zone was breaking. So I was watching it. I couldn't trade. I was just doing some work. But by the time 9 a.m. came in, which is going to be Pacific time for me, 9 a.m. Pacific time, I saw a very clear pattern. So I was identifying that this was a very clear bear flag. Very simple. Everyone should know this by now because we talk about it so much. Bear flags, right? This is very textbook. You see uh, higher lows, you see lower highs, and you see a squeeze. So what does it mean when we see a squeeze, everyone? It means that one, price is leveling at the same area, right? So it's squeezing, meaning that supply and demand is at an equilibrium. When it's at an equilibrium, you could see price start to squeeze and get smaller and smaller. These candles aren't playing so wide anymore. And it looks like Tiffany just put a little chart pattern there. But yeah, so it looks like a bear pennant, bear flag. It's very yeah, it's probably looking like a bear pennant. But this is a bear pennant that pretty much went up, and then what happened was it broke the flag and it went all the way down. But I did identify from previous data that there is a zone in this part. So March 30th, if I scroll the chart all the way back, you could see that there's a lot of price action difficulty of it breaking or subsiding within this area. So this was a zone. And what I did here, oopsie, what I did here was I took this put, made some good cash, and I entered in on calls. The reason why I entered in on calls is because I saw significant volume. Sorry, I did not put the volume indicator on. I should probably put that on so you guys can see it. I saw significant volume being picked up as soon as this reversal comes in. So we could consider this as an RBI. So an RBI is a reversal bar ignite, meaning that it's a doji candle with high volume. So when you see any indication of volume picking up, volume is your friend. When you have volume on your side, you could assume that we have consistent uptrend, buyers coming in. I entered in exactly on this candle as a confirmation because it ignited past the consolidation zone, aka this little point right here. scalped it very quickly for some profits, 4% gain. But keep in mind, I'm playing heavy contracts, and these contracts are only $100 each. I was making 3 to 4% a pop every single time. So this was the first scalp attempt. Oh no, actually, let me look at the time. Yeah, I entered in right here, this candle right here. So it wasn't that much on gains, but keep in mind, if you're scalping and you're playing multiple contracts, that could be very fruitful for you. You can make a good amount of profits just by playing these direct uptrends. So I played this. I used a stop. I used a trailing stop loss and profit, and I ended up netting 3.5% just off this gain. And that was just a very quick scalp because I identified the pickup of volume. I used a trailing stop because we don't know how strong these uptrends are going to be. And if I were to just wait and hope that it's going to go up, then I would get stopped out for a loss on my entry. So if you use a trailing stop loss, right, at a very close mark, I did $5, right? I stopped that in profits at 15 contracts. That was a very easy scalp just because I identified the pattern. I identified that there was a doji coming in, right? Buy signal didn't come in because it obviously went even lower, but I did re-enter in on the scalp on the re-entrance of volume with the sell-off of a rejection of a top point. So this is the top point rejection, all right? Still in trend, still very much in trend, so I'm going to play the downtrend. And you could identify this pattern as well too as like you could call this a pennant as well. Not so much, but you could very much identify it as a pennant. Came into the play, re-entered in on this orange candle. This was the second. This is the third scalp attempt, and I rode this thing all the way down, and I got stopped out on this candle. This one was a 8% gain. Not that much, but when you're scalping 15 contracts and they're only worth $130 each, it's a lot of money. This one, same story, right? As soon as I saw a rejection point, Doji came on in. I wanted to see first just to be safe because we're sitting so close to a zone. I decided to wait to see an ignition, right? An ignition past the zone or a buy signal, right? For me, I was just assuming because a huge amount of green volume candles coming in that buyers were starting to take control. I entered in right off this break. So this was the fourth scalp attempt. Entered it on here, wrote it all the way to this candle. Let me see if I got this right. Actually, I sold this at 10.37. So it was actually in the development of this candle. And this one was another 4% gain. 15 contracts. I kept going and going and going. And you could very much do the same thing over and over. You see a rejection of a doji. You see red candles coming in. You see a confirmation. This is the confirmation candle that it's happening. It's also igniting below the EMA cloud. You can go short. I didn't take this short, to be honest with you. I actually played the buy signal because I didn't believe that it was going to actually go even lower, but it did. And this went all the way down. If I looked at the contracts for these puts, if I'm looking at the history on TOS, these contracts also went for 3% gain. So you could scalp these trends easily just by identifying when volume is picking up. And this was a very easy technical play to figure out because the volume, like it looks like buyers and sellers were just taking control back and forth over and over and over. And this was a really easy scalp to play. I played this buy signal. One, because it ignited past the zone. The volume came in. I went long immediately after this candle. And this one actually gave me a 5%. No, actually, this one gave me a 6% gain. And I sold this all the way. I got stopped out right here. So I didn't sell at the top here. I could have made 10%, but I got stopped out on this reversal candle because it looked like an RBI. It's a doji signifying that there's going to be a reversal coming in. I'm gonna put that there so everyone can see it. So you could very much see if you're looking at these patterns, RBI, RBI, not so much of an RBI, but it had a continuation of trend, which means it hit the trend line all the way down, and it went straight back down into course. Eventually, there's another RBI right here, reversal bar. RBI. No RBI here, but it was trapped in a zone. So those are the three things I like to look for. I like to look for one, is there an RBI? Two, is there a continuation of a trend line that I'm trying to follow suit after? Or three, is there a zone that I am hitting or about to approach? So you should be thinking about that actively when you're trying to scalp or to trade. You got to think about what are the scenarios that could potentially play out. And I do the same thing when I'm scalping Boeing as well too, but Neo looked like a really good example for me to explain. And these are the three things I like to look for mentally when I'm looking for continuations or if I'm looking for quick scalps. Of course, if you play flag patterns, then of course it's gonna be a lot stronger. But typically, what I like to do, I like to look at that, and I like to look for flag breakouts. Right, flag breakouts. Very clear bear pennant breakdown of the bear pennant on this side. You could enter it in. You could enter in exactly off the break, or if you're a little more cautious, use your other indicators. It was holding the EMA cloud straight below. Continuation of volume came in, and it went all the way down into this consolidation zone. So you could see it was struggling here. And then this was the last play of Neo that I took. I actually did not take this short. I was doing some work. But what I wanted to do is I wanted to see a break of trend. And I actually waited because I'm noticing it's been hugging around this consolidation zone the whole time. So I actually waited until I saw the bottom support level being broken. Um, so what happened? Yes, there's a zone right here, but there seems to be a little bit of a support in this area. So I waited till a support break, which was right here. I entered it on the short because I saw identification of volume that came in, which means sellers got control of this market. It was holding the EMA cloud all the way down. And then I could see a direct trend line going straight down as well too. So I knew that there was a trend following in my direction. And the trend broke even lower. When you have a trend breakout like this, sorry, this is ugly. Trend breakout, right? Very clear decision that it's going to go down. And I held this thing all the way down and I sold this one for about a 20% gain. Um, but that is a very clear indication of how you could scalp these trends very correctly. But over time, muscle memory, you'll identify these little reversal candles and you'll just know. And you could use identification of volume or these reversal bars. These orange printed reversal bars are very much key. Yes, these sell and buy signals are going to come in, but these little orange bars are really good if you understand price action to a degree that you could understand divergence, or you could understand reversal bars. So these are easy reversal bars. I'm going to draw it out for you. Looks like this. My bad, this is ugly. But yeah, the reversal bars. My goodness, let me extend this longer. Now it looks like a cross. Yeah, reversal bars. If you see any indication of a reversal bar similar to this, doesn't matter if there's slightly bit of a body there. The point is you want to see what does this mean psychologically if I'm a trader? What's going on basically is there's indecision. So indecision is not your friend when you're trading. When there's an indecision, that means that the buyers likely have lost control. They don't know if it's going to have a continuation. Of course, what could play out though is that you could still see flag patterns being developed. That's why we like to wait for confirmation. Because what happens if I do assume it's an RBI? Okay, sometimes you could be wrong. You could assume it's an RBI. You could draw a flag here, right? But this is where the confirmation comes in. If I don't see a confirmation of it still sitting within its flag, then it's a no-go. There's no point in me being in the trade. There's no point in me trying to scalp and see if it's going to go even higher because it just broke trend. It just broke the flag pattern that I was hoping for. Of course, things could come back. Maybe it could hold the EMA cloud, right? But when you're scalping, your point is to take the profits as quick as possible. And scalping could be a little difficult if you don't have that much capital to play with, especially if you're playing 1 to 2 contracts at a time. I'm playing with almost up to 15, right? And eventually everyone's going to be able to get to this level. But I've noticed that a lot of our traders now are starting to become very profitable. And now it's time for me to step up and let everyone know that you could actually, you know, do very well in scalping with you when you're having an amount of capital like this, and you can play it very quickly and very safe just by playing stop losses at the bottom of the pullback of your entrance. So, for example, if I take this buy signal here, my stop loss if I'm scalping, I'm going to leave my stop loss at the pullback of the candle. The pullback is the bottom of the candle. Am I correct in assuming that the color of the volume bar indicates whether there are more sellers? Yes, correct. So if you see these volume candles, it's either red or green. If it's red, it can be assumed that the sellers have taken control of this candle. Green meaning the buyers have taken control. But this is based off the time frame that you're trading in. Just keep that in mind because if you're looking at the 1 minute candle, it could be very different compared to, the other things. Like for example, this. But I mean, it's actually it might be really easy to scalp on the 1 minute chart. You just have to really identify, these little reversal bars quicker. But if you're a little more hesitant like me and you want to be safe, then the 3 minute is just as fine. But if you notice on the 1 minute, wow, it's like scalper's heaven for Neo. You could see every single downtrend, every single movement, and you could take advantage of these creases every single time. And we like, for us, right? Especially if you have an algo this popular, you would want to take advantage of these uptrends, downtrends, uptrends, downtrends, uptrends, because you could start to, profit in between. Well, of course, though, right? Overall, Neo today was absolutely bearish, right? So you have a choice. You could be a scalper, you could be a day trader. The day traders would probably just hold the puts all the way down, but we don't know, right? What if it just has a rude awakening and it goes all the way back up and it retraces? This is considered a scalper 7 because of how kangaroo-ish these movements have been. And this is just one stock. Okay, sorry, I'm reading the question. So if it's red, it could just be one more. Yes, correct. It could be just one more buyer and one more seller than a buyer. That is 100% true. That's why we like to wait for confirmations. You would need to identify the trends, right? And if I were to erase all this, I'm going to erase all this so everyone can see. Um, a lot of people trade in this ideology. They do it off trend lines. So if you see a trend line and it breaks, go short. Trend line, if it breaks, go long. Trend line, if it breaks, go short. You could rinse and repeat the same processes over and over and over. But when you get little creases like this, it makes it a little more difficult, which is why we have the EMA cloud to help you gauge that. So if it rejects that, you could go re-enter in off the break. So if you were to filter out these signals, right? Like if you were to filter out these entrances, use the EMA cloud to your advantage because the algorithm is very smart, right? The tools that we compiled into this algorithm are really significant if you could use them properly. And this is why we like to have these sessions to teach you guys every single Wednesday and Sunday, so you can be better prepared to get better every single day. And it looks like it's happening. It seems like every day members are getting better, which we love to hear. But this is where we fine tune. This is where we really think of what's going on in the chart. Because what happens here, if I were just to play short here and play the trend, and what if I go long here? You probably wouldn't have not made any profit. That's why we like to trade off a confirmation. Of course, that could be very difficult because what if I waited for confirmation here? I wouldn't have secured so much profit, but it's safer. It's better than you getting into this kind of a play and you don't really make much profit. And then if you're a little late and it completely drops on you, well, goodbye your play, right? So that's why you have to be very smart when you trade. You have to use stop losses as your friends, right? When you're in profits, and you know you have the intent of scalping, you need to be thinking about that logically as well too, because there's a scalping market, there's a day trading market. One is completely different than the other. Scalpers are going to take profits as soon as they see them. Day traders are going to try to identify the intraday trends and try to hold, right? Overall, Neo was bearish. This was very clear the whole day, so this was very easy to play. But if you can make money in between these trends, right? Like let's say, for example, you have puts existingly already from open and you held it all the way down, but you were playing the buy signals in between, you would absolutely make more profit and you would do very well. You would smash your goals. And that's what we like to teach. We like to have you guys take full perspective and to create better opportunities for yourself to get better. Um, but that's just Neo. I love this stock because now it looks like it finally has picked direction. This is a little choppy to play, but when you get markets like this where it just completely downtrends, oh my goodness, you got to take advantage of these scalps. You just have to. Same thing with Boeing 2 weeks ago when it was just uptrend, downtrend, uptrend, downtrend. It's beautiful, especially when you know how to master these reversal points. It's great to see. But any tickers or any questions up to this point? Yes, yes, I did say that. If you're going to be scalping, it is going to have you require a lot more capital. But I'm not going to lie, it looks like everyone here is starting to make some profits. So I better expect everyone starts to use those profits, start to give yourself a better chance to make some more money. Am I right? If I'm looking at trophy room for the past couple days, it looks like everyone's having fun. That's what we like to see. Yeah, you are going to need more capital though, no doubt. It is going to be a little bit more capital intensive, but man, if you can maximize your profits, why not, right? Let's see what else we got. Let's see. Let me look at this watch list and see what pretty much went crazy today. 5% loss on VIX. We're not gonna look at VIX. Let's take a look at. Let's actually look at the infrastructure stocks. I'm gonna go take a look at this one, Caterpillar, because this was also a great example. Just just how look how easy this would be had to, I mean, of course this was a little bit more choppy, but look at the beginning intraday trends of Caterpillar just on the 1 minute chart. Facebook did well. I'm gonna take a look at that afterward. Thanks, Michael. Market open. My goodness, we saw a complete uptrend of Caterpillar. So basically, what's going on with the infrastructure stocks? I'm gonna let everyone know this. Just if you are unaware, um, infrastructure is in, technology is stale. What this means for you, with the presidency of Joe Biden coming in, we can expect that infrastructure stocks are going to start to take some value. Market makers are now going to be positioning their capital into value stocks. Value stocks, as in Caterpillar, stocks that have been consolidating for months and months on end, right? This is a bullish consolidation. Eventually, what happened once it broke consolidation point, it broke through. Profits from tech start to go into infrastructure. Of course, it retraced back up, but ultimately, what happened was it held that same support zone. Now that this consolidation was now a support, it held that support zone. And what happened? Buyers took control, went all the way back up. But what's been going on for the past couple months? Infrastructure has been in. Reason why we have this going on is because one, tech is starting, people are going to start taking profits on their tech stocks that have been going crazy for the past 4 to 5 years. And this is a good opportunity, especially now that we know that, this is happening again. You could identify that possibly we could see another bullish consolidation here. We don't know how long this is going to happen, but you could play these direct trends pretty much over and over and over again. But you could see that it's been on a consistent uptrend, but it blasted high because of the rotation. So what's going on? SPY is going to start rotating into um, infrastructure stocks. I'm not quite sure if they've already started this rotation, but it is expected to happen. So you could also look at the banks as well too. If I look at JP Morgan, finance has also been increasing like crazy ever since the rotation has been happening since February. So the rotation is in, right? We could pretty much see that things are going to start to play in the direction of finance, infrastructure. Tiffany, what's the other one again? Is it marijuana? I'm not sure if marijuana was in that category, what Kathy Woods was talking about. Was it marijuana?
Uh, I actually have no idea. I just know infrastructure. That's it. Maybe
Infrastructure for
value.
sure. Value. So that's like what, like the Costco's. I don't know if that's considered value. Um,
Mm,
that's a good question. I'm gonna make a nice list for everyone because I feel like this is a really important thing to know because we don't experience stuff like this often. Kathy Woods actually says that these rotations happen every 45 years. So the last rotation that happened was when the dot-com bubble decided to go into real estate. And now we're going into, now was it real estate? Was it the internet bubble? Something. No, it went from industrials into the dot-com bubble, and now we're going into infrastructure and finance. That's what's going on. That was the last rotation, but now we're rotating into infrastructure because I think the green movement has been identified that the infrastructure of the U.S. needs to be improved, and which is why we're having a turn from profits from tech stocks going into finance, banking, and infrastructure. So that's a good thing to know. I'll compile a list, and I'm going to post it out today, so that way everyone has a notion, so that way they can think about them when they're day trading. But let me go back to Caterpillar so I could identify what happened today because I was watching it in the morning and I was like, wow, it's actually pretty aggressive. Um, okay, let me turn this back on. Cool. Okay, so what happened? It had a complete uptrend, right? It bursted past the pre-market range, which is right here. The pre-market wasn't really that strong. It was just pretty much just flat. But it was very easy to tell once that open range breakout happened. That you could have played calls immediately right at open. So right at open, if I'm looking at this options chain right now, this option chain right at open actually went up 40% when it hit all the way to this point. So it was a 40% gain. And then what happened was volume came in with a sell-off. So if you see anything like this, right, where you see any confirmation of this happening, like a little bit of this is not an RBI, but it's a sell off because one, it's diverging, right? 2, I don't see a distinctive bull flag happening. And then 3, there's a confirmation candle that came in. So when you see red candles coming in on the volume bars and you see a consistent sell-off, maybe start to consider taking profits if you entered in the first 2 to 3 candles of open. So if you're trading the open, this is a very good key to know, especially if you're thinking about this logically, you're trying to make your decisions. Just be very careful when you see stuff like this happen. If you're gonna take a play, let's assume you took this buy signal, you better have a plan. So when I say I like to put my stop losses at the bottom of the pullback, I like to do that if I know I don't have the EMA cloud on my side. Look at the distance of the exponential moving average in comparison to how high that stock has gone, right? I don't really have that much support here, which means that if I were to trust the EMA cloud, I am now trusting that it's going to hit all the way down here and then try to reverse all the way back up. That's not good trading. That's not safe. You kind of want to have the idea that if I am going to hold a position, I better know where my exponential moving average is at. I better know where my supports are at. There's none. This thing is just going up. And eventually, once people decide to take profit, everyone just sold the position all the way back down. So just be very mindful. When you see a sell off, you see 3 straight volume candles of a complete sell off. You just got to be prepared. I would have gone in short because I broke that little support that it pretty much recreated at the top point, re-enter in, and then once I see a sell signal and I see this EMA cloud here, this might be a little scary because you got the EMA cloud facing you right there. But if you entered it on this orange reversal bar, that would have been still a good play because if let's assume, right, the next candle prints slightly higher above here and then it goes and reverses, your trailing stop loss would have at least given you some profit here. Probably not that much, probably like 3 to 4%, but if you're scalping, this is a really good thing to have. But if you trusted the play and you went all the way down, all the way down, all the way down, and you got stopped out here because you had a trailing stop loss, this is how I would look to play it. So if I got stopped out right here because it just went flat and my trailing stop loss got me so deep in profit, but then it reversed on me and it stopped me out, which is what trailing stop losses are designed to do, how do you approach the next re-entrance? Okay, cool. I'm going to look for the top resistance. I'm going to look for the bottom support. And I'm going to play patient, right? And I want to play with the idea of having a confirmation in mind. So let's assume a buy signal comes in, but it's still within this consolidation zone. I will smack you. I'm just kidding. No, I'm not going to smack you. But no, I would be very disappointed if you just went straight buy signal. If I don't see an RBI, I don't see a volume pickup of buyers coming in, and I don't see a confirmation of a printed candle above the consolidation zone. That's the safest way you're supposed to trade it. Of course, right? If you know you're right, then you're right. Like if you see something that you identified that that this pattern or this strategy um, does not support, then by all means take it. But just keep in mind, right? Like if you're asking me what is the safest way to enter in on these scalps off breaks, you like to wait for a confirmation, specifically maybe an orange bar or an RBI. You could research RBIs within our trading education platform where you could identify these patterns, or you could look at these chart patterns that Tiff always posts all the time because she's always drawing flags. Everyone here is drawing flags. Um, but eventually, support broke. This is a bearish consolidation, the opposite of a bullish consolidation. I wish I could show you one here, but there's none. But this is a bearish consolidation because what happens was it's consolidated. Buyers got squeezed out because they've attempted, right? Like what does it mean, right? What does it mean when there's a bearish consolidation? It means that buyers tried to take control, but there's way too much sellers that it convinced them to sell their calls or sell their long positions. And once that happened, it triggered a complete sell-off, breaking the range, which is this little area right here is the range. Once the range got broken, it went straight back down to test another bearish consolidation. Um, but it looks like what happened was when it went over here, right? Same thing. You want to keep that same idea in mind. Is this another bearish consolidation? We don't know. You gotta really look for confirmation because what happens here, consolidation comes in, orange bar comes in, but it's still sitting in that zone. I'm not too comfortable yet until I see a breakout of the zone. Cool, it broke out, right? But look, I want everyone to see this because I always like to explain this. When you're squeezing and the candle is above the spice cloud. Think of the spice cloud like this little area right here, right? Think of these as your danger zones. If the security is too far out, right, it has to come back in. What happened here? If you bought here, this is just good, this is just good trading ideology. If you're going to be scalping this, you could get a better price because what's going to happen is if it escapes too far out the zone, eventually it has to bounce back in. This would have been your entry. I would have never taken a position that's sitting outside of Spice Cloud because one, it is now in the danger zone, right? I would have taken the position at this candle because it bounced back in. Just want everyone to know this. It's not mandatory, but it does give you a better price. Like, what if it gives you an extra 2% because you waited until it bounced back into the zone? And then if I see volume candles coming in, I got the EMA cloud holding the position as support. Use a trailing stop loss. I probably would have gone stopped out either on this candle or this candle, but same rule applies. What if it bounces back within the like? Oh yeah, it bounced back within the cloud. See what happened? It bounced back within the cloud and it's now holding in there, still holding. And then what I like to do in situations like this, where it's just holding the cloud consistently, that's where trailing stop losses would be your friend because eventually it's going to keep going up and up and up. And remember the rule I told you guys how like if it diverges, there's a chance that it could reverse. But the thing about the trailing stop loss is it will protect you if that was the case to happen. I mean, like if it was just a big fat candles all the way through. Like, oh yeah, that happens with stocks like Tesla. If it's a really high volume stock like Tesla, then it's okay. But if it's a lower volume stock like Caterpillar, then nah. Like you kind of have to follow that same mentality. But if it's like a hype stock like Tesla, I'll see if I could find an example of that happening because it happens more to those stocks with increasingly high volume, like the GameStops, the Teslas, the Babas, the Boeings. That's more of the case that this would like that rule would not apply. But if it's a lower volume stock like Caterpillar, then no. Um, it's just going to depend on the security. But typically, from what I've noticed, if it escapes out of the danger zone, it's going to come back in regardless. It doesn't matter how long or when. Eventually, it will happen. Same thing would happen to Tesla as well too. If it's too far in out the zone, it's going to have to come back in no matter what. It's just because there's an equilibrium point within the middle of these price structures where price has to come back in because it's outside of a moving average in a range, and when it's not there, buyers are going to identify that and they're going to think that the security is too overvalued and they're going to sell out, which is what happened. They went too far out, sold back in, and then it went to a standard deviation, meaning it's back in a leveled range where it could completely grow without having too much of a buying pressure where there's going to be an aggressive sell-off. But what happens is it holds the EMA cloud all throughout. You probably would get stopped out here if you put a trailing stop loss. Everyone asks me, Brian, what kind of trailing stop losses do you put? I like to put a $5 to $7 mark trailing stop loss, and it would depend. If I know that I'm just playing something like this where it's just completely up and down, I'm gonna use like an aggressive. I'm gonna use a less aggressive trailing stop, like a $7 mark, but typically it's like $5 to $7. Because I feel like at that point, like you're like if you go higher than that and it fails on you, it's like you gave away free money. So, but if it's something like Tesla, yeah, no, like Tesla, Boeing, I would definitely not put trailing stop losses of like $5 to $7, probably 10 to 15 because of how crazy it plays and how aggressive those movements are with those kind of candles. Because the gamma and the delta are so high. But you'll know, right? Like you'll know just by trading securities over and over and over that you'll understand the feel of how aggressive they play. Can you put a trailing stop loss on options? I think so. I actually don't know. Can you put trailing stop losses on Webull? I think you can. No, yeah, no. Unfortunately, neither Robinhood or Webull yet offer a smart trailing stop. Is this right? I think this is from July, so I'm not sure if this is up to date. True said there is. Yeah, they do. So it looks like they do. I use Thinkorswim, so I don't quite know about Webull, but I will put that on my notes because it looks like they do provide trailing stops. But it should say trailing stop limit or trailing stop. It should say something like that. What's a good? What's a good stock to scalp? Whatever has the most volume and whatever the market is playing. That means if we know that the market's having a rotation going on where tech is going into infrastructure, the good scalps are going to be the ones with the huge amount of volumes. Caterpillar is a good example. Yesterday was not a good example because it just played trends. Like these little buy and sell signals that got faked out are really aggressive. So I mean, you could scalp this. It's just that you got to know how to take profits very quickly. But yeah, no, this is actually no. Caterpillar is great to scalp. I will go look at to Facebook next because that's also a good example Michael pointed out. But yeah, uptrend, right? Volume came in with a sell-off, right? Like right here, this is a volume sell-off. Held below EMA cloud, go all the way down. But again, people have different trading styles. Tiffany is more of an intraday trader, where she'll hold positions longer throughout the day. I am a little bit more of a scalper who will try to get into multiple contracts and try to take profits. But who knows? Sometimes I'll go intraday and I'll try to predict predict the overall movement of the stock. But if it's something like this where it just goes up, down, like yeah, I'm gonna be scalping this thing like crazy how many times I can. Um, so what times? Both. I like to use a 3 minute primarily because I feel like it's a lot better to gauge and understanding, and there's less head fakes when you use the 3 minute chart. And the 3 minute chart's great for intraday trading as well too. Like you could use the 3 and the 10 or the 15 for intraday. Like if you want to predict the longer trend movements, like you could switch off to the 10, the 15, and the 3. But for me, right, it's gonna depend on your style. I feel like the 10's too long for me and I get often bored. So I'm a scalper, so I'll use the 1 or the 3 minute chart. Very volatile stocks. Yeah, the Teslas, the Facebooks, the Rokus, slower ones like the KOs, Apples, yeah, because they're lower in volume. Okay. Yeah, this is another good example. Um, because basically what happened with this one, right? If I'm going off the ideology of an open range breakout, this is the open range. Bulls to control the open range slightly. If you were to go long right at open or taking any of these candles, it may have been a little scary because it went into a downtrend, but it held EMA cloud all throughout. So the EMA cloud pretty much blanketed this sell signal. But of course, when you're like so deep into the cloud, you're a little scared. So if I'm like in a position like this, like right at open, I would wait, right? Like before I put a trailing stop, I would wait to see what if there's an identification of a flag. This was a very clear bull flag that formed throughout. Um, and eventually, what happened was once the bull flag did break, volume came in with buyers taking control. And then what happened? It held the EMA cloud all throughout. If this is where I would put a trailing stop. If I have identified a flag breakout or any range breaking out, this is where I would put a trailing stop because you probably wouldn't have gotten trail like stopped out, probably not until this candle, and you could have re-entered in off the break of the range. Right? This is the top resistance. You could enter in off the range breakout after you see, right? Of course, after you see one, it held the EMA cloud. You see some volume of buyers coming in, which is right here. Rising volume, it goes all the way back up, and you probably would have gone stopped out if you have another trailing stop loss right over here at 312.25. So that's probably where you would have gone stopped out if you put a trailing stop loss there. But same rule applies, right? If you see any sell off, right, of a support being broken, where's the next support here that I could see? This is the next support. This is the range that it's sitting in. So you have a choice. You could either wait till the range is broken or you could just take the sell signal. I probably would have just taken the sell signal because I have a confirmation of volume coming in. Go short, let this thing ride all the way down with the EMA cloud with it, identify the trend line, and if I see a trend being broken, either the trailing stop is going to kill you out or the trend's going to be broken.
Okay, so we're gonna go over. I know Brian was talking about trend breaks and also scalps. So a good example of that is one of today's trades, which is Snap. So if you guys did your homework, which what I put out yesterday night, or you can check it this morning. Snapchat was in a falling wedge and it actually broke out of the falling wedge, which prompted me to enter in a snap trade today. I put a couple of the charts in the chat throughout the day as well. And it looks like it just broke out of it with pretty good volume right here. You can tell by the volume with this really big green candle as well. In the morning, it jumped from 56 to 60, which is really good. And if we are looking at the intraday, I was looking at the 3 minute for scalping. And so the example of snap in the falling wedge is a trend break. So it was breaking out of the upper trend line, which you could see right here, which is this pink diagonal line that I was charting. And so in the morning, I used yesterday's highs and lows for the fib levels. And I also went to the 30-minute to chart this overhead zero fib level. And so I was able to graph that. And this was in the morning. This was our entry, I believe. So if you were to enter at a R1 break, which is right here, you can tell that it was a little bit consolidating at this level. And as it was moving on throughout the day, we just saw straight green candles and it broke through every single fib level that I have on here. So throughout the day, even if you entered here or even here, you were able to make some money off of Snap. So this is a really good example of being able to scalp Snap. So even if you were to enter in right here, sell it here, enter in again, sell it. So you could always do incremental selling as you are holding more Snap contracts. They aren't that expensive. I believe they were only $100 to $200 for these. So you could have scalped all day on these. And so when Brian was mentioning trend line breaks, this is a really good example of breaking a trend with volume. Usually you would want to wait for a candle close above the trend line, which is right here. And this serves as a perfect entry for Snap. Okay, so does anybody have any questions on how you were able to play Snap today? Not, we'll look at the 1 hour and see how Snap is on the longer time frame. So it is breaking out of that falling wedge. We are seeing a consolidation around this area. It does look like a bull pennant right here. So tomorrow we will be looking for a potential continuation of Snap's upside above the 0.5 fib level right here, testing the R3 at 63.5. Excuse me. Or we can see a bearish movement and come back down to retest R1 and the upper trend line. If it goes back into this trend line right here, puts do sound good if it does break below the support right here. Okay, so I'm going to go over my Square call out today. So in the morning, we saw Square have a lot of volume and a lot of upside potential. So I believe the Spice Algo printed the buy signal right here, right at the first green candle. But usually for me, when I'm scalping, I like to wait around 2 to 3 candles for an entry point, just so I know the direction of it and I know that it is not just a fake breakout. So we entered in right around this pullback right here for Square. And so we were able to get a good entry at around 345 per contract. If you took I think it was the 245s with me. Yeah, the 245 calls at 345. And so once it printed this green candle right here, our contracts went to 395. And so I did trim right here, right when it printed that red candle. And you could have held it if you wanted, but I just wanted to trim out some profits. And so as Square was moving up, you could trim some more as well if you are holding more contracts. If not, you can always if you are holding one contract, you can always take profits whenever you see fit. So for example, for Square, I did chart the fib levels on the longer time frame, so on the 1 hour. And so I was able to get a good feel of where was headed. And so right here, when it was basing right at the 0.382 level, that prompted me to take a look at Square on the 1 hour and say it was in between the 0.382 and 0.236 fib level, which meant that it could test this possible resistance and then come up to this supply zone. So this is the supply zone that Square is currently in right now. It's currently forming a a sideways pattern, so it could be consolidating right here, so it can go in either direction for tomorrow. And so for square, our contracts went from 345 to, if you held it all the way up here, which was my last contract, it was at 657. So that is how we scalped square. What's the difference between waiting a couple candles for confirmation versus chasing? So chasing, if you were to chase square, so chasing means, sorry. So chasing basically means going into a trade blindly without confirmation. Right here, I entered in right when a candle closed above R1 at this candle right here. So you're able to see that there's actually confirmation on the 5-minute and also on the 3-minute. That's what I use my pivot points and my fib levels for entering. And so I also take into consideration the amount of volume. You can see here, this is really low volume and this is really high volume. You can also check with the data window right here how much volume is on each candle. So it's pretty good volume for square, and so that's why I decided to go into it. Chasing would mean going into, sorry. So chasing would mean that you're going into a trade and not confirming with your charts or not confirming with price level. So if I were to take a trade, let's say I FOMO and I take a trade like right here, this is called chasing. But I mean, if you did chase on Snap or Square, it would have worked today just because of that whole uptrend. But in the future, I wouldn't recommend chasing without having an entry and exiting plan. So Don, did that make sense? Okay, cool. We also, I think there was an AI alert for Roku as well. So Roku in the morning, right here, this little run up with Roku, it was just stair stepping all the way up and then just started forming a base after that. So this is a really good example of a reversal. So Roku's pretty good. What else did we play today? I know Brian went over Neo. Oh, Tesla. Tesla was a really good one. I didn't call this one out, but I did post a chart in it, and I told you guys to watch below 680, which looked good for puts to fill in the gap on the downside. So it did form this rough descending triangle, and this is the demand zone that we were talking about, which Tesla was bouncing off of. So once it broke through here, this would have been a good entry for puts, and also here as well. So this is how you can also play Tesla. I was also using my fibos for confirmation if you were playing it. So that is how we scalp. Does anybody have any questions so far? When I say fill the gap, yes. So if I'm going to go to, so right here, okay, so there is a huge gap right here from where Tesla gapped up on Monday. So there's this huge gap that is filling, which I said around the 660 area. So you can see here Tesla gapped up right here and decided to come down and consolidate in this area. And so there's this gap that needs to be filled. And I said 90% of the time gaps are filled. So you might want to look for that. But for example, if there is a gap on SPY at 280 and SPY is at 400 right now, I wouldn't be worried about SPY filling that gap downside unless we do go all the way down there, but I wouldn't be too worried about gaps that large. If it is a gap from the previous week or from the previous trading day, then most of those gaps do become filled. So supply zone is an area where a supply zone is where areas of sellers come in and basically sell all of their stocks or sell their contracts. And demand zone is where buyers usually come in and stop the stock price from going further down. So Dawn, does that make sense about the gap? And then okay, cool. And then I can explain a little bit of supply and demand zones if you guys want. I think we have a pretty good example for. So I think I used okay, so I'll kind of explain supply and demand zones really quickly. So demand zones are where buyers step in. Supply zones is where sellers step in. So I can draw this right here. So whenever you want to identify the supply and demand zone, you just look for areas where there's consolidation or a lot of uncertainty, which means that the bulls and the bears are fighting with each other. So right here, I can tell that this area right here, so I'm just going to draw a rough rectangle right here, is where sellers like to come in. So this is going to be the supply zone. Sellers step in. This one right here, and you can tell because every time it consolidates, or at least majority of the time it consolidates right here, the stock always drops and then retraces back to this supply zone, or it just drops all the way down and then over here retraces back to that supply zone. And you want to identify the areas of demand as well. So I can say that this area right here is going to be an area of demand, which is where buyers step in. So this is going to be the demand zone. And by using these zones, you can identify where the stock is potentially going to be reversing on the longer time frame or on the shorter time frame, or at least there is going to be support or resistance at a certain price level. So for example, I can say right here, the sellers step in between the 545 and the 550 zone. And then over here, the demand for the demand zone, the buyers usually like to step in around the 500 to 505 zone. Do you draw those zones by connecting the top and bottom borders to the wicks or candles? No, you really don't have to. For me, I just use the zone as a general reference to where buyers and sellers step in at. So you can see right here, I really don't connect all of the wicks together, but I get a majority of the candles together. It basically is just visual a visual indicator for you to say, okay, this is an important zone that I should be looking at when I am trading this stock. You know, if I'm buying right here and I wanted to sell up here, I have to keep in mind that, okay, sellers like to step in at this price level. So I should probably start taking my profits, or at least I should probably create an exit plan. If you want to be precise, you can. For me, I just use it as a general zone. So you would probably see sometimes maybe this is a $7 zone and then this is a $2 zone. So it just really depends on how large the zone is and also how accurate you want it to be. Most of the time, if you want it to be more accurate, I would probably add zones on top of fib levels or on top of drawn in support and resistance. When you're drawing your wedges and triangles, you'll attach them to the wicks. For me, it really depends. I do a mix of both. So, for example, I'll take um, snaps, for example. So you can see that I draw a general trend line just to connect at least the bottom of the candle, and here you can see that there's a wick in the bottom of the candle. So majority of the time, you do not have to be precise. So if I wanted to move it up here and then make this one touch the bottom of that wick, it really doesn't make a difference in terms of identifying the pattern. But if you want it to be more accurate, or you want it to have it touch the wick or touch the candle close, personally for me, I like it when the trend line touches multiple parts of the candle. So right here it touches, touch, 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 and touch right here. So if I were to take the top of the wick right here, it wouldn't touch here. But for me, I find it more accurate to find the trend line touching or having multiple points of like inflection, basically. What if the wick was super long? So if the wick was like up here, that's what I consider an outlier. So that's why sometimes you guys might see me use the candle close as reference. So if I were to chart it here, you can see that it touches multiple times here. But let's say that the wick was up here, it would just be like that if you wanted to chart it. But for me, I find it more useful to have it within a closer range. So does anybody have any further questions? You wanted to ask me about market conditions or what we are looking at for tomorrow? Feel free to ask. The top ticker I'm looking at tomorrow, SPY. Always number one, SPY. The second, we will probably be looking at Tesla, because Tesla, I want to see if it is going to bounce on the 1 hour or it is going to continue to the downside back into the little wedge that I drew. So we will see if it wants to come back in. How you're analyzing the day before. Yeah, I just have to go through my watch list again and redo my charts and zoom out all that stuff. So that's why it just takes a little bit of time to do it. Okay. So I have my Tesla one in a different tab. I just don't remember which one, but we'll just draw it roughly right here. And so you can see that there is, I called this a bear, like a bearish wedge, but it can go in either direction. Right now, Tesla's at this upper trend line area, so we can see it right here. This is where it gapped up on Monday, and it's slowly coming back to test the top of this trend line right here. And so if we don't see a bounce in on this trend line, we might see some more downside, all possibly testing the bottom trend line as well. So we will see if Tesla wants to be a bull or a bear scenario, because if it does bounce off this trend line support, that is good. If it doesn't, it might come back into this wedge. Yep. Facebook, Tesla, SPY. Yep. If I have a Tesla stock at 418 is a good time to sell. I mean, it's honestly up to you whenever you want to sell. I really can't tell you when to buy and when to sell. I still have one Tesla from sorry, I still have Tesla stock from the 300, so I'm holding that for my long term. If you wanted to sell it, you can if you wanted to take profits. Personally, for me, if you wanted to have more capital for options, I would keep stuff in your long term separate from whatever you do for options. So it's your choice. I can't tell you when or when not to sell it. It's really yeah. Uh-huh. All right. So if nobody has any questions, I think Brian is back. Um,
Okay, so yeah, this was just supposed to be just a short Q&A, just to go over some scalping methods, and just a little bit of refresher for those who, are just wanting that extra help. But other than that, does anyone have any more questions for Tiff and I before we close this out? No problem. All right, everyone, you have a good rest of your evening, and we'll see you guys tomorrow. Please take a look at the watch list.